Hey guys, thanks for stopping by here at thetradinganalyst.com. This is Taylor and we're going to get into some charts. Before I do, really quickly want to make you aware that we are offering a free 14-day trial right now. We've never offered a free trial before, but we're doing it right now. It's a limited time offer and I wanted to make you aware of that. If you're at all interested in signing up, now is the time to do it while we're having this free trial special offer. I'll tell you more about it at the end, so be sure to stick around. All right, so let's get into some charts because that's why you're here. So ACIA, this is a big one. This is the weekly chart going back 2 years. This is 2 years of action. Let me get rid of that cursor for you. So 2 years of action, okay, 2 years of action, weekly chart, and this is what we like to call a moat, okay, a moat, okay, a lot of sideways trading, okay, it was in a downtrend for a while. I'm going to go back 4 years. You can see in a downtrend, and notice how it kind of evened out here. So I'm going to go back to the 2 years. So evened out, traded sideways, didn't really go anywhere for the last year and a half. Okay, so what was it doing? Okay, what was it doing? It was building up energy. Okay, whether that was for the move up or down, we didn't really know. Now we know that it was most likely for the move up because we're actually seeing an up move and breaking over resistance. So the other thing I want to mention too is we had this big gap down right here on heavy volume. Okay, even though that's a red week and it gapped down huge, notice how we never went lower after that. So what does that tell you? It tells you that all of that volume that was during this week right here was buying volume. Okay, because we only went up after that, so that was buying volume, huge buying volume. And a lot of people ask, well, you know, that was several months ago. Why does that matter for now? Well, big institutions, big owners, they're not buying and selling, you know, within the next couple of days. Okay, they're buying down here, and then they're going to sell way up here. Okay, they're looking at it from a long-term perspective. Okay, so that's that one thing. It's also a false breakdown. Okay, because here you have this support. It's a clear level of support. Okay, everyone can see it. Look at it. For about 4 months or 6 months straight, we traded sideways against that support. We broke that support and then boom, violated that level from the downside again, broke over that level. Now we're seeing another nice move up the last 2 weeks. Okay, we broke over this little resistance right here. All right, you can see it was resistance there, and we're making new 52-week highs. Okay, that's very bullish. We also have, and again, you know, I don't use moving averages as you know, a single. I'm never going to buy something just because a moving average crosses or anything like that, but it is another sign that the tides could be turning here for this stock, which is the 20-week moving average crossing above the 50-week moving average. You can see it didn't do it the whole way down. The 20-week moving average was well below the 50-week moving average. Now it's above it. Now we're breaking over resistance, and we've had several good reactions to earnings, okay, in the last couple of months or couple of quarters. Okay, you can see just looking back on the daily chart, going back 200 days, you can see here was an earnings reaction, gap up. Okay, here was an earnings reaction, gap up. All right, here was an earnings reaction, gap up, massive move. Okay, so clearly the tides are turning. Okay, because before, what did you see? Saw a gap down, saw a gap down over here. Now we're seeing gap ups, and the trend is most likely changing. Okay, this is a longer term perspective. Okay, so that's ACIA. The next, and I'm going to cover some shorter term plays here, so don't worry. So, but I do have one more longer term play for you here. So here is FEYE going back 3 years, very similar to ACIA. I'm going to move my face out of the way a little bit. So very similar to ACIA. Okay, what do we have? A moat here. A moat, just trading sideways for the longest time. This is going back 3 years. Okay, 3 years. We didn't go anywhere. Okay, obviously if you're looking on the daily chart, it would look a lot more volatile. But really, in the sense, if you compare it to what happened before, big move down, big move up, big move down, and then if you compare it to this action for the last 3 years, we barely went anywhere. Okay, so that's to kind of put it in perspective. Okay, the volatility has gone way down. All right, so back to the 3 years. So not only that, but we headed higher right here, and notice how we traded sideways throughout this whole time. But notice this period right here, the last about year and a half, we traded even in a tighter range, right here. All right, and notice how the 20-week simple moving average has stayed above the 50-week simple moving average right here. Okay, this is very, very tight action, and now we're breaking out of that range. So again, what does that mean? All this sideways trading, what does it mean? It means it was building up energy. Okay, so it has so much energy now to do what? To break out. All right, so that's what we're looking at for FEYE. Again, this is the weekly chart. Not expecting this to happen overnight. You know, just looking at and again, I think this could break out pretty massive. I think it can double in price almost. I think it can head back up to about $30. Let's see, that first little mini resistance is up here at about 24 bucks, based off of this little about 3 or 4 weeks that traded into that range. The next decent resistance, let me go back, oops, 5 years. Let's see, and the next resistance is right around 28 bucks. You can see it was previous support right here, so that's going to be the nearest pretty significant resistance at about 28 bucks. So for starters, first conservative target, 24 bucks, then $28, then we'll kind of see how it reacts, but this has some big implications here. Just to kind of look back here, now that we're looking back at this 5-year chart, you can see that this kind of sideways trading action, okay? And then we broke out of it right there. You can see big move. We moved from about 35 bucks all the way up to 56 bucks. And that was after just, what is that? About 7 months of sideways trading. It's about 7 months of sideways trading. Over here we have almost 3 years, not almost, 3 entire years of sideways trading. Okay? And this was 7 months. It moved from 35 to 56. That's what, 80% gain, something like that. On here, 3 years, I mean, it's going to move big, okay? It's going to move big. If it doesn't, it's going to be a huge, huge failure, okay? I don't have a crystal ball, but this is a setup we've seen many, many times before. And if it wins, it's going to win big. If it loses, it's going to lose small, because that's why we have stop losses, all right? So that's FEYE. The next one I want to look at for you guys is, I'm going to go with CHRW. And CHRW, I'm going to move my face out of the way. So CHRW, what we have here is a false breakout. Here's the weekly chart still. False breakout. Clear. What do you need for a false breakout to happen? You need a clear level of resistance. It also works for false breakdowns. In that case, you need a clear level of support. But right here, we have a clear level of resistance there, right here. We broke over it right here, made a new all-time high, and then boom, what happened after that? We broke under that level, all right? And notice the recent action that we've seen right here is below the 50-week moving average, okay? Needs to consolidate most likely. As well, if you look at the more recent action, I'll zoom in a little bit more. This action looks to me like a bear flag, okay? Here's the trend down, right there. Here's the flag. There it is, little bear flag, okay? So I'm expecting lower prices on this stock. Target would be about, let's see, right about here, about 81 bucks, given that it was previous resistance right there and right there. Broke over it here, turned into support right there, that's a nice logical little step for it right there. So CHRW, the next one that I want to share with you guys is, let's see, JP Morgan. And this is getting into more shorter term action. So what we have right here on JP Morgan is a false breakout. Okay, so first and foremost, JP Morgan is in a downtrend as of the last few months. Okay, last few months, JP Morgan downtrend. Okay, high, lower high, lower high, low, lower low, lower low. Okay, that's what a downtrend is. Okay, very simple. So, and the other thing I want to mention, we called for the bounce on JP Morgan and the rest of other financials well before it moved. Okay, and it hit our target. We called for bounces against this level right here on JP Morgan, as well as the rest of the financials. You can go back, watch the videos I did back there. When was that date? The end of October. If you look on our blog, you can go back and see those videos that we did on XLF and the financials. We called for the bounce at the end of October. It hit our target up here. Now we're looking for short trades. Okay, so again, this is a reminder. You shouldn't care which direction stock's headed. All right, you really, really shouldn't. So what we have here on JP Morgan is a false breakout. Okay, well, first let me cover something else. So first and foremost, right here, we secured the downtrend with this rejection here by getting rejected at the 61.8 Fibonacci retracement level. If you draw it from the high here to the low here, you get that 61.8 right there where that high is. Okay, right where we got rejected. Also, the 50-day moving average was right there. Okay, also this resistance was right there as well. You can see there was support here, right there, right there. We broke that support, and then it turned into resistance right there. Okay, so we've got three things already lining up, showing that JP Morgan is getting rejected there. The other thing I want to mention, I'm going to remove all this stuff, is this false breakout. Okay, this false breakout, right? Let me move this line if I can. Oh. Okay, so there it is. So here's this clear, remember, for false breakouts, false breakdowns, you need a clear level. So a clear level of resistance, in this case for a false breakout, right here, right there. Look at all these days right there. Boom, boom, boom. 5 days in a row coming into that level. We broke over that level right here. All right. And then what did it do? Broke right back under it. Okay. So I think a similar thing is going to, or I think this is going to not bode well for this stock, and then it will head lower, targeting around 104 as a first conservative target. Okay. Just to show you how powerful these false breakouts are, here's another one we recently had. Here's that resistance there, right there, right here. We break over it here, break right back under it, and then look at that big move lower. So that's what I'm looking at for JP Morgan. The next one I want to take a look at is BABA. So BABA, this is one, and not to toot my own horn, okay, I'm definitely going to toot my own horn, but, we called for this move. We called for this move. You can go back, watch the videos that I did on BABA back here right when it came out with earnings, okay, right when it came out with earnings, about the 1st and the 2nd of November. I know I did a video sometime around that time. You can look on the blog videos, and you're going to see that we did call for this higher prices, and I don't think it's done yet, not even close. So the reason we called for higher prices is because we had a little false breakdown, all right, little mini one right here, support, broke that support, gapped up over it, but right here, and we did this video, I believe we did this video the day before earnings came out, okay, and we said that if earnings was a positive reaction, that was the time to go long on BABA, okay, and we got a really good reaction on earnings, okay, with heavy volume, with a very strong candle, okay, nice buying wick at the lows here on this day, closing near the highs of the day, heavy volume. Next day was a gap up with heavy volume as well. Don't let that red fool you, okay? Don't let that red fool you, okay? We gapped up, made a higher high and a higher low, okay? 2 big volume days in a row, all right? Next thing is we had a nice little reversal pattern here. It looked like, okay, maybe we're failing, but no. This day right here, we closed over the previous day's high. That was the signal that it was confirming the breakout. And you saw that today, big gap up over this resistance right there. We broke over the 50-day moving average as well. Look at last time we were over the 50-day moving average it wasn't until about 100 days ago. Okay, 100 days ago, about 3 or 4 months ago. And today gapped up with big volume. Again, that's what you want to see. Big volume on this up day, positive reaction to earnings. All we're doing is getting that follow through from those earnings, okay? So that's what we're seeing on Alibaba. You have to know that earnings move stocks, okay? I'm a technical trader. I don't even look at earnings reports, okay? I don't. But I know that they play a huge factor in how the way that stocks move, okay? And you can do it very simply like I do. I never read an earnings report, okay? I've maybe read 1 or 2 in my entire lifetime. But what I do is I just see how did the stock react to earnings, okay? That's all you need to know. That's all you need to know. Because we don't get paid by our opinion or our own analysis on earnings, or someone on CNBC telling you what they think about a particular earnings. We get paid by the movement of the price, okay? In this case, the movement of price showed us that the market liked those earnings, okay? Gapped up, strong candle, heavy volume. Keep it simple, guys, okay? Keep it simple. So now we're seeing continuation of that breakout. First logical target is going to be that gap fill right here at about 162. You can see there's that gap right here. As far as, the other thing too, we also have Fibonacci retracement level. If you draw it from the major high here to the major low right there, you can see that gap fill lines up perfectly with that 38.2% Fibonacci retracement level. Remember though, and that's why that's the target here, conservative target. Just remember, this is still in a pretty decent downtrend, okay? So who knows if this is going to continue further after that. We'll kind of take it day by day, but just remember, this is still counter trend to the last several months. So with that said, I think Baba's going to head higher. Congrats if you guys followed along from these lows down here. You should be doing nicely in the green if you bought when we did this video. So that's Baba. The other one I want to touch on is Google, and this is going to be a more shorter term play. I'm just going to do GOOG because it's showing the closing price, because right here my chart on Google is actually showing after hours prices, and Google is down a couple bucks after hours, so it doesn't show you how as strong as the candle actually was on a closing basis. So Google, this is one I'm eyeing tomorrow for a long, and I'm going to go over exactly why. So Google, first and foremost, if you watch my other video I did on Google and all the rest of the FANG stocks, you can get some more information on this. But first and foremost, the last earnings report we had was right around here, and it didn't really go anywhere. And to me, that shows that it may have been an okay earnings report, but the market was not looking great, so it just kind of didn't really go anywhere. Okay, last earnings report we had was positive right here. Okay, obviously we headed lower and we didn't hold, but it was a positive reaction to earnings initially, and we just kind of headed lower, potentially just because of the market. Okay, regardless of that, we're looking at the short-term action right here, and what I want to point out is we kind of had our chance to break down, okay, but we didn't break down. I'm going to zoom it in even more so you can see this action. Let's go to 50 days. Okay, so what we have here is, and this is how bottoms form, okay, oftentimes they don't just head straight lower and then straight up, okay, they take time, okay, same thing with tops, same thing with bottoms. So here we had Google had a big gap up right here, okay, that's your first sign that we could be seeing a bottom, okay, because if you look over here, we had a gap up, close over the previous day's high, but then we didn't really get anything after that. We kind of just traded sideways, didn't really go anywhere, and obviously it didn't produce a bounce. Okay, we just headed lower from there. But notice how right here we have this big gap up, and then yeah, we headed a little bit lower just to fill that gap, but then we bounced, and then look at this other big gap up right here, and then we traded a little bit down, no big deal. But then today, another nice big move, closing over the previous 1, 2, 3 days highs. Okay, so that's your signal right there. And it's not going to be forming forever. I think that it's ready to go. I think it's ready to go tomorrow, most likely, or the next day. But it's not going to be doing this for much longer because today was that kind of signal that, okay, this could move. Okay, now we need some strength from the market. Okay, we need some strength from the market. So if those two things line up, if there's strength in the market tomorrow and there's strength in Google, I think Google can really move tomorrow. So if Google's high is broken, if today's high is broken, okay, if you're looking on Google, it's 1079. 1079 was today's high, or it's actually 1078.87, something like that. But just to use a nice round number, if today's high of 1079 is broken, I think it's going to head higher. I think it's going to head into about at least, could head higher than this, but just conservatively, I think it's going to head back up to the 50-day moving average. If you're looking on Google, that price is right around 1130. On GOOG, it's 1120. But, and it's, again, it had its chance to break down, and it's kind of curling. Do you see how it's kind of curling? Okay? And it held these levels, held the gap up. We never went lower than this. Okay? Gapped up, held this gap support right there, never went lower than that. It really had its chance to break down, but it held its ground. Now, if we can get some strength in Google and the market tomorrow, it can really move. So that's what I got. I really, really hope that this video helps you out. Again, remember, we've got the free 14-day trial that you can take advantage of right now. Again, it's a special offer that we have going on right now. We've never offered a free trial. Well, we've done it, I think the last time we did it was maybe 2 years ago. But right now, this is the first time in a couple of years that we've offered a free trial. So I really strongly suggest that you take advantage of it right now while you still can. Because if you bought and sold trades at the wrong time and you've lost money and you've lost your confidence and you don't have maybe the knowledge either of when the right time to get in is, then you really need to join here. Okay, you really need to join here. We're the #1 options trading service, and what you're going to get is you're going to get, well, first, I'm here on the home page, and you have to know that we are different from all the other services out there. First of all, we've been around for about 5 years now, which is longer than most of the services out there. When I first started, there was just a handful of us. Right now, every Joe Schmo is out there thinking they can have a service, but we are different. Okay, and this is our different approach. I'm not going to read everything that it says right here, but definitely read that. Take the time to read that, and then you'll be able to understand why we are different. I'm going to move my face a little bit, and you're going to get easy to follow real-time trade alerts delivered directly to your cell phone in real time. We do short-term trades, we do swing trades, and we do it all. Okay, and if you were a member during this period of time, these are just a few trades that we've had in the last few months. These are real gains, real trades that we placed and we alerted to our members in real time. And when you're a member, again, you can join for free for 14 days. You're going to get trades just like this delivered directly to your cell phone. You can see what our current members are saying. join for the free trial. The other thing that you're getting, this is really important, guys, we are completely transparent, and you're going to get access to our real-time portfolio tracker feature. Okay, real-time portfolio tracker feature. All of our trades that we place are going to be put into this real-time portfolio tracker, and you're going to be able to see complete transparency as we with transparent updates. You're going to see how the performance of our trades, and you're going to be able to watch your account grow alongside ours. And the other key thing is you're going to be able to increase your knowledge immediately. We focus on education a lot within the service. We have an educational library that you're going to get access to. Again, you can watch all the videos for free in those 14 days. Cancel your membership after that if you want. And you know, that's the thing. We focus not only on the trades, but we focus on the process and getting you to become a better trader on your own as well. And you're going to have all the tools within the membership. Okay, so go ahead, sign up for that free 7-day trial, free 14-day trial. You're going to have everything that you need to be successful. It's a limited time offer. Again, you can choose either the monthly or the annual or the quarterly. All of the membership options have a free 14-day trial, and you can choose whichever one that you'd like. Okay, obviously the annual, it goes up as you go up from the monthly. The quarterly is discounted, and then if you go up even more to the annual, it's discounted even more than that. So it's totally up to you which one you decide. I really hope to see you in there. I'd love to help you out. I'd love to chat with you. If you got any questions, let me know. And I really look forward to seeing you in there. I'll see you guys in there.